So we're talking about Alphabet, and do you expect their revenue to moderate in the second quarter, or are they still going to be going gangbusters?
So we do expect Alphabet's revenue to continue to decelerate from levels we've seen last year. I think we're looking for a growth rate of about 10.6, 10.8% on a year-over-year basis. So it is decelerating slightly. We do expect it to continue to decelerate in the second half of the year as well. It's really going to come from their more ad-supported businesses, and when we think about just Alphabet in general and their ad businesses specifically tied to search as well as YouTube, we're looking for growth rates, let's call it high single digit, which is relatively in line with the broader digital ad spending outlook that we have. As we kind of go into 2026 and thereafter, we are looking for search to see those growth rates continue to decelerate, largely based on some of the concerns that you've heard out there about some of the competitive landscape, that we're seeing from the likes of OpenAI and others.
Yeah, let's break that down. So what I heard, what my ears perked up at: search acceleration, decelerate. They're still the behemoth for search, though, correct?
They absolutely are, and they will continue to be.
And one could expect that they will implement AI as part of their search ecosystem. So why would I, as an investor, be concerned? I would expect, and this could be wrong, but I would expect that Alphabet gets ahead of everybody. I know that ChatGPT is designing a search engine just based on AI, but Alphabet is so many trillion miles ahead of them. Won't they be able to accelerate into the AI space faster?
So that's a valid point, and we don't necessarily disagree with that. But what I would say is you're going to see new emerging competitors enter the market. There are going to be more AI. What AI does do is it just creates a different way for us to all search and interact and look for information, right? So that's going to have just a natural impact on Alphabet's long-term trajectory, at least the way that we're looking at it. So we're looking for growth to continue for Alphabet, but in the same respect, as you get all these kind of new ways to search and what have you, there are going to be new ways for advertisers and new platform for advertisers to spend on. So, in the same respect, we've got a pending a legal issue going on with the likes of Apple and others. So the fact that they're probably not going to be that default search engine across all these different ecosystems also likely means they're going to lose some share. They'll still be the dominant share leader in search, but nonetheless, there are going to be alternatives out there. And as a result, I think as an analyst, you have to be more conservative in nature about the long-term outlook of their search business and assume that they probably don't grow as fast as the broader market, although they do continue to grow in our view.
Okay, so we've hit some of the AI issues. Now let's talk about cloud. And I'm going to ask a rudimentary question because I am, as a Luddite, somewhat confused as to what is Alphabet's business. I still think of them as search and ad-generated search, but cloud is becoming a big part of their growth picture. Can you help me understand from an investor standpoint what I should consider? Because when I think of cloud, I think of AWS and I think of Microsoft. I'm not sure I always think of Alphabet or Google, except when I have to clear out my drive because I've hit the free, because I put videos up there, I hit the free cap and then I have to clear up some space.
Yeah. So cloud is becoming a huge part of that business now, probably about 14% of their revenue. But more importantly, it's a business that we think will continue to grow at about a 25 to 30% range, and potentially even greater than that if we see faster than expected growth in terms of the consumption of AI here over the next couple of quarters. So when you think about what drives that cloud business right now, it is just greater AI capacity, the need for more enterprises out there to get their hands on that AI capacity. You're getting a Blackwell ramp here over the next couple of quarters, something that we've started to see in the first half of this year. That will continue, and as you have more of those AI workloads, that will continue to improve the growth trajectory of that section, component of their business. You've also got areas like workspace for their broader enterprise space. And that's something that's also continuing to grow. And you've got more AI capabilities through Gemini that should also kind of help at least their revenue potential per seat on that side of things. So there are a number of different ways that they're going to grow. Obviously, cybersecurity is also becoming an increasingly big part of that business. They're making an acquisition of the Wiz that's going to be completed next year. So when you start thinking about the different components, Google has a number of ways that they're going to generate more revenue on cloud. And I'd also say this as far as their cloud business and comparing it to other companies like a Microsoft Azure. When you look at what Microsoft has done here over the last couple of quarters, last year they actually restructured their cloud, how they look at their cloud business. They kind of reorged some of their workspace oriented type businesses into their other productivity segments. So it's not an apples to apples comparison when you look at the growth for Google's cloud business relative to Microsoft as well as Amazon.
Two-part question here about the legal challenges for Alphabet, and one of them may be out of left field, but do they face a real threat of being broken apart by these legal challenges in the United States or in other places? And two, if they were broken apart, where would the cloud business go? To which entity would it belong?
So we see a very low probability of a breakup here. Our Washington analysis team, that's essentially kind of our team that looks at a lot of these legal cases out there. They're essentially prescribing about a 10% probability of a breakup. And the way they kind of look at the legal case, or at least this search monopoly case, where we actually expect to get clarity here over the next couple of weeks. By the end of the summer, I think we'll get some clarity as far as the court remedies are concerned. So I think as far as earnings this time around, you're not going to probably get much movement in terms of stock reaction because everyone's hinging and waiting on this outcome right now. So, but as far as our Washington analysis team, they kind of look at it as far as the 3Ds are concerned, right? And that's distribution, that's data sharing, and that's divestiture. And maybe to your point, as far as divestiture is concerned, we're not looking for that. The market, we don't think, is looking for that. But if we see something along the lines of the need for a Chrome breakup or something, that is something that's going to create a negative reaction to the stock, we think. Again, not our base case, but that it is a risk out there. And as far as, go ahead.
Yeah, my question about where would cloud go, it seems it's an irrelevant question if it's only a 10% probability of breakup.
Yep.
Okay, so let me ask you this, and I do want to get to the issue of AI with Google. When you talk about Gemini, from my vantage point as someone who creates content, Veo 3, I don't know if I'm pronouncing it correctly, is quite remarkable. It's really good. Are you expecting them to talk about the text to video component? I mean, is it even generating anything that would appear on the balance sheet worth recognizing as we go forward?
So it's not a needle driver for the company right now when you just look at that, component itself, but it's a huge part of their kind of AI objectives. When you start thinking about video, opportunities and even imaging opportunities out there. They just had a great developers conference in May, and I think it really blew a lot of people away in terms of some of the capabilities. And you're just kind of highlighting the imaging side of things, but they've done a lot of stuff as far as what Gemini is capable of doing. And what's really great about Gemini here is Gemini spans across all their different workloads, right? I mean, they've essentially talked about having the most vast, diverse kind of ecosystem out there. They've essentially got 15 platforms with over 500 million users. And being able to have Gemini really leverage all those different ecosystems, I think is absolutely a huge competitive advantage out there for this company. And I think it'll just get Gemini in the hands of more and more users. That it also allows them to have access to more and more data relative to other competitors that are out there in the market.
And again, from a Luddite's perspective, Gemini is their overall AI business, where Veo 3 is a component of that business.
Yes.
Correct?
Absolutely, yes.
Also, because I'm myopic and I still care about my friends who are in traditional media, the YouTube as well as YouTube TV. I think I saw an article just the other day that for the first time, traditional linear broadcast, let's face it, it's dead. I mean, it's been in the coffin for a while, less than 20% of consumption. What's the outlook for YouTube TV, or is it, and YouTube as a content delivery system for video, or are they not as big a line in the bottom on the balance sheet?
I mean, listen, YouTube's a huge opportunity for them. It's going to be as big as they make it, but it's still a huge component of that company. It's a component that we expect to grow around slightly above the broader digital ad market. So it's a business that we think can kind of grow about 10 to 12% here over the next couple of years. You're now just hitting, let's call it the third year of that NFL network partnership, and I think that's an important partnership out there. They're going to look to innovate, with that partnership. You're going to see them start coming out with new capabilities and products kind of tied to the NFL network. So they're toying around with things like just having NFL network games beside YouTube creators out there, so that you can leverage the tens of millions of subscribers that these YouTube creators have out there. Obviously, AI is being leveraged all across YouTube. It's helping with YouTube shopping experiences, improve targeting ads, and what have you. So there's a lot that they can do here with YouTube. We'll see, whether or not they can inject faster than expected growth in that side of things. But we expect it to probably be about a low teens percentage, growth driver, as well as percentage of their total revenue.
And my last question to you is two-part. First, what do you want to hear from leadership on the earnings call, and what do you think will be the unexpected surprise during that discussion?
That's a great question. And, I think the most important thing here, as far as the earnings calls here, and again, I don't think there's anything that they can really say to sway the bulls or the bears. I think the bulls are going to talk about the attractive valuations and what they're doing as far as AI is concerned. The bears are going to continue to be concerned about the competitive pressures, as well as some of the regulatory issues that stand out there. So you're not going to get an answer to any of that on this call, which is unfortunate. But if you're an investor here, you kind of want to hear what they, of course, have to say about the opportunities tied to AI. I think cloud is going to be a big part of the story here, and whether or not they can grow faster than what the street is looking for. If they can post a number, let's call it in the low 30s range in terms of growth, I think that'll be a positive here for investors, because I think investors right now want to see where the outsized growth can come from outside of search, and cloud is a big component of that. So I think we want to see that really work, and potentially see better than expected operating margins from that business as well. So we'll see what happens from that perspective. And then what was the other part of your question? I'm sorry.
What do you think might be the surprise, the unexpected comment from them?
Yeah, I mean, I think the other thing that maybe others might not be thinking too deep about, but might be top of mind right now, is what Meta is doing on their end of things in terms of spending billions and billions of dollars at this point, acquiring talent from all different organizations, including at Alphabet and people that have worked on Gemini. So I think it'll be interesting. They'll definitely get asked it in terms of what Meta is doing and what their outlook is as far as spending levels. But when you look at the employee headcount at Alphabet here over the last 3 years, since the end of 2022, it's essentially been down over the last 2.5 years. So they've actually been very nimble on the hiring side of things. They've shifted their focus towards investing more on the CapEx dollars and overall dollars in terms of building the infrastructure. But with what Meta is doing right now, it'll be interesting to kind of see if we see any deviation or changing comment there from Alphabet.
I lied when I said last question. This is actually the last question. I don't know if you can answer it, though. Is the stock undervalued, do you think?
Absolutely. When we just actually rolled out our 2027 estimates, and again, we're looking for only about mid-single digit growth for search in our out years, which we think is more than attainable, just given what they've shown us with AI mode, AI overviews, the usage rates there. So we don't necessarily think search is dying at all, but we're just being fairly conservative. And when we go out to our 2027 estimates, this stock is trading less than 16 times on a net cash basis. So from a valuation perspective, it's by far the cheapest among the mega cap tech stocks. And again, I think a potential catalyst could be if we don't get a worst case scenario from these court remedies here over the next couple of weeks. That is something that could maybe start help powering this stock higher. and you just as you just start alleviating some of those worst case scenario concerns out there. So it's a wait and see right now. But from a valuation perspective, this is the name to own among kind of the Mag 7 names if you're more kind of value centric in nature.